When Mitt Romney said his tax rate was 15%, I was shocked. That he paid so much. When a reporter asked former Governor Mitt Romney during the presidential primaries last year what his tax rate was, he guessed probably closer to the 15% rate than anything. Everyone freaked out, like the guy was getting away with murder. But I just scratched my head. Why was he paying so much? If average Americans are angry at the idea of rich guys like Mitt Romney paying only 15% of their income, then average Americans need to wake up and get smart with their money. Good tax rates are not just for rich politicians like Romney. These opportunities are available to everyone. In fact, you can do even better than Romney. There is a way to safely invest your money and not pay a cent in taxes. You can blow Romney's 15% out of the water. It isn't a muni bond paying a measly 3%. I'm talking about a publicly traded, safe, non-volatile cash cow that yields 8%, 9%, and 10%, and has quadrupled in price since the 2009 market bottom. You can rival Mitt Romney's wealth and beat his tax rate. And I will tell you how in every issue of MLP Profits. Yes, I want to tell you how to make money and not pay taxes. You've heard rumors and environmental critics complain that oil and energy companies don't have to pay corporate taxes. It's true, some don't, but some do. And with the right investments, you don't have to pay taxes either. Let me explain. The story starts back in 1986. With Ronald Reagan in the White House, Congress passed a sweeping tax act that included a barely noticed giveaway to the energy industry. Washington wanted to speed up the development of domestic energy resources and encourage investors to join the party. What happened next was unprecedented. In effect, the government exempted a certain class of energy-intensive companies called Master Limited Partnerships, MLP, from corporate taxes. That's right, MLPs pay no corporate taxes, in a country with the second highest corporate tax rate in the world. Hard to believe, but true, and it only gets better. For example, you don't buy stock in an MLP, you become a partner. But you're a partner who doesn't have to come to work. Instead, you let your money work for you. And at the end of the day, you get paid, and very handsomely at that. If you want to live off of your investments, these partnerships are for you. You can pocket as much as $10,000 a year for every $100,000 you put into these cash cows. And you can stagger your payments to come in monthly, so it's convenient to pay monthly bills. As an added bonus, your personal taxes are so low that you'll think the IRS has gone soft in the head. Thanks to depreciation, 80% to 90% of the distribution that you get from a typical partnership is tax-free until you sell. In fact, some partnerships let you pocket high yields for 10 years or more before you pay a single penny of tax. One of my favorites yields a nice 10.3%, and 90% of your income is tax-free. Let me be your expert energy advisor. Hi, my name's Robert Rapier, and I am the Chief Energy Strategist for MLP Profits. I've made a small fortune investing in energy stocks over the years and have helped many of my readers do the exact same thing. With your subscription to MLP Profits, I can help you too. I've worked in the energy field for over 20 years. I became hooked on investing even earlier, buying my first stock at 15 with my paper route earnings. I've traveled the world working in the energy industry. It began with an engineering degree from Texas A&M, and then has taken me to the farthest reaches of the planet. In Billings, Montana, I figured out a way to blend gasoline that saved the company $9 million a year. For a couple of years, I led a butanol production team in Germany. Along the way, I picked up 5 patents, one for a new way to convert ethane into ethylene, cutting production costs by $5 million per year. I ran a research lab in Oklahoma, developing gas-to-liquids technology. I headed up a team of engineers in Scotland, developing oil and gas projects in the North Sea. Later, I worked as an engineering director for a Dutch environmental technology company and provided engineering support for a facility they were building in China. Now I have a new role conducting technical due diligence on new energy projects. Based in Hawaii, I continue to travel around the world to evaluate startup energy companies for wealthy private investors and hedge funds to make go, no-go investment decisions that can mean millions of dollars to both the startup and the investors. In other words, I decipher which energy companies have legitimate, game-changing technology and are worth investing in. How to get a big payoff for a little bit of homework. You don't have to have Mitt Romney's millions to pull this off. You don't even have to be in a high tax bracket. You do, however, need the right information. And MLP Profits gives that to you. For instance, when you invest in an MLP, you don't buy shares, you buy units. You don't get dividends, you get distributions. You don't report your gains on a Form 1040, you use a K-1. When Congress gave the green light to tax-free partnerships, it was mainly to promote investment in midstream energy assets, the pipelines, storage tanks, terminals, and ships that move energy from producer to user. Since they profit from the constant flow of energy, midstream MLPs let you milk a steady stream of profits no matter what the energy prices do. I don't know if oil will be 50 a barrel or 150 a barrel a year from now. I can't tell you how much coal or natural gas will be selling for either. But I can guarantee you that we'll almost certainly be using more of all three. In other words, these midstream MLPs are a pure play on the growing demand for energy, which is why they've provided a growing income stream for so many years. Here's another thing I think you'll like about MLPs in our exclusive publication, MLP Profits. When you own an MLP, the interests of the people running the show are the same as yours, because you're all owners. Management has a genuine incentive to run their operations as profitably as possible. If the MLP loses money, they lose money too. How many times have you bought a stock, watched it sink, and then seen in the news how the miserable jerk of a CEO hauled in a 7-figure bonus? That's never happened in an MLP. These guys are the most disciplined managers I've ever seen. You won't find any of the showy and wasteful, ego-driven moves so much of corporate America is guilty of. Since a distribution cut would hurt a partnership's unit price, management is extremely prudent with its cash. As a rule, they keep 5% to 20% more cash on hand than they need for their distribution. Of course, their job is made easier by MLP's stable cash flow. During the last recession, one of the sharpest in our history, the consumption of petroleum products barely budged, and the cash kept flowing to partnerships. No wonder the typical MLP's earnings volatility is less than a third of the S&P 500's. Unless the managers are real boneheads, you'll keep getting those fat distribution checks every quarter, no matter what the economy does. Here are 148 reasons to love MLPs. With their safe and generous dividends, utility stocks are the be-all and end-all for many income investors. I like utilities too, but in some ways, MLPs beat utilities hands down. For one thing, they have much friendlier regulators. Partnerships aren't regulated by states, but by benign federal overseers, who encourage management to innovate and cut costs. These savings are then passed on to investors. Combine a cash-heavy operation with generous tax benefits, and you have a formidable business model, one that has paid off well for investors. Over the past 10 years, MLPs have doubled the stock market, rising by 148% to the S&P 500's 73%. One of my favorites produces, stores, and transports natural gas through the nation's midsection. Its price has gone up more than 8 times since the market break in 2008. When you see returns like that, you might think you've missed out and that it's too late to profit. Not so. In MLP Profits, I share my picks and help you decide which MLPs are best for your portfolio. There's still time for you to reap the rewards of a partnership because this asset class is still in its infancy. One more thing. How about huge tax-free capital gains? An investment throwing off a 10% distribution is enough to make most people happy. But plenty of partnerships have also grown impressively, creating huge capital gains. Let's say you put $25,000 in Enterprise Products Partners at the start of 2000. By now, you'd be sitting on $357,125 and collecting $17,116 in annual distributions, a 68% yield on your initial investment. Enterprise is by no means an isolated example. A well-run partnership can rival the growth of a high-flying tech stock. Here are some examples. Up 183%. This Denver company does just about everything you can do with natural gas: gathering, processing, transporting, storing, and selling it. It is also perfectly poised to profit from rising shale gas production. We've owned it for almost 3 years, and it's kicked out a 183% total return. But we're hanging on for even bigger gains as its expansion plans kick in. 13% yielding market leader. We hit a home run with this owner-operator of dry bulk ocean tankers. The company is turning into a dominant force in the shipping industry. Its vessels are relatively new and therefore fetch better than market rental rates. More importantly, its cash flow is locked in, with 92% of its capacity contracted for 2012 and 74% for 2013. We're up 107% to date and pocketing a 13% yield. Master of the midstream. This powerhouse MLP gives you a piece of the 7 most profitable sectors of the oil and gas business: pipelines, storage, natural gas processing, marine services, fractionation, drilling platforms, and natural gas liquids. Moreover, it's the dominant midstream operator in the liquids-rich Eagle Ford Shale. It increases its dividend like clockwork, bumping it up for the past 30 quarters in a row. Its new pipeline, going online this year, will relieve the notorious crude oil bottleneck at Cushing, Oklahoma. This superb MLP is heavily owned by insiders, ensuring management is greatly incentivized to grow business and earnings. The Heavy Lifter transports gasoline, diesel, and jet fuel through 8,400 miles of pipelines and owns 180 bulk terminals handling more than 87 million tons of coal and petroleum coke. Up 94% since we first recommended it, an 8.1% current yield, we're urging readers to buy even more at these prices. MLP Profits is about being smart with your money. There are 89 publicly traded MLPs in the United States, and about 30 more on foreign exchanges. If you jump blindly into this group, you're likely to run into a few nasty surprises. But put my experience and MLP Profits to work for you. The moment you accept a no-risk trial to MLP Profits, you'll have 24/7 access to every bit of our research. We set you up with a password that lets you into our exclusive, private, secure website, jam-packed with our latest analysis, advice, and recommendations. Every time you log on, you'll find an in-depth report of the month, over 30 pages of industry analysis and advice on the timeliest partnership sectors. When you realize how wide the spectrum of partnerships is, you'll see that there's one that's right for every investor, aggressive to conservative. A how they rate table. Here we rate all 89 MLPs trading in the United States with a buy, sell, or hold, so you can compare them all at a glance. We look at the percentage of income generated from fees, its payout ratio, the debt-to-capital ratio, and its prospects for distribution growth. We include the good and the bad because sometimes it's more important to see what you shouldn't own. 3 market-beating portfolios. Choose from aggressive to conservative to growth to build your own ideal mix. We put every MLP through our proprietary 4-point safety rating system to make sure your distributions are safe. And it must be working because 11 of our 22 total holdings are now up over 100%. Here's how our picks break down right now. 5 aggressive income picks with current yields up to 12.5% and total returns up to 116%. 8 conservative income picks with current yields up to 8.6% and total returns up to 207%. 5 of these 8 picks have already doubled. And 9 growth picks with dividends from 6.2% to 9.3%, average returns of 86%, and plenty more upside. Complete fund coverage. As MLPs grow in popularity, so do the number of vehicles for investing in them. We give you buy, hold, sell advice on every closed-end fund, ETF, ETN, and mutual fund in the MLP arena. Email flash alerts. Whenever there's breaking MLP news, we'll pass it on. We'll also occasionally send you buy or sell signals when we can't wait for the next issue to act. Live reader chat sessions. Every other month, our lead MLP research analyst sits down for a few hours to answer your questions in detail. Whether it's broad energy trends or which MLPs we like best at the moment, nothing is off limits in these interactive, free-for-all sessions. Back to the beginning newsletter archives. The moment you join, you can access every bit of advice we've doled out since we launched MLP Profits 4 years ago. Plus, you'll enjoy immediate access to all of our events, videos, and special reports. It's as if you've subscribed on day one. MLP Profits Monitor e-Zine. This informative bi-monthly bonus analyzes emerging developments in the MLP sector and relays news updates on portfolio holdings. Try it all for 3 months. On me. MLP Profits is the only publication that tracks down every one of these hard-to-find cash cows and covers them all in one convenient service. Despite the extreme level of detail we go to, as publisher, I try to make this service affordable to everyone. A year of MLP Profits, 12 months of advice, along with 24/7 updates and buy-sell signals emailed within instants of our investing decision, normally costs $697. Most members will earn that back on their first trade. But today, I'd like to try something different and offer it for $200 less. That gives you a full year of MLP Profits for only $497. And if for any reason you decide it isn't for you, just let me know in the first 90 days and I'll return your money instantly. No questions asked. But if you're not yet comfortable committing to a full year, you can pay as you go and subscribe quarterly for just $147. It's a low-risk way for you to test drive MLP Profits to see if it's worth the money. No matter how you join us, you'll also receive a package of special reports we've prepared to get you off to a running start. Report number 1, Ultimate Tax Shelter for Income Investors, and Report number 2, MLPs, Conservative Cash Cows. If, over the next 3 months, you're not satisfied with the money you're making, I'll send you a 100% refund. After that point, you can still get your money back on the balance of your subscription. The special reports are yours to keep no matter what. So join me today and tell the IRS to take a hike. Taxes are a funny thing. We all do our best to minimize them, but it often bugs us when other people do the same thing. If Mitt Romney wants to pay 15%, that's his problem. You and I can do better than that. As I've pointed out today, there's no reason for a wealthy guy who lives off his investments to pay that much. So why not check it out and see what you think? MLP Profits is an exclusive investment publication, not a mass circulation service. It is for paid members only who want to grow their portfolios now, so it may or may not be right for you. But you won't know until you try it. I'm inviting you now to take 3 full months to look over all of our research before you decide to continue. Put it to your own personal test. The tougher, the better. I think you'll see these unique securities can earn you substantially more income in the coming years than you'd ever make in conventional stocks. You'll certainly keep more of what you make. If it turns out you disagree, simply cancel for a full refund. No questions asked. Sincerely, Robert Rapier, Chief Energy Strategist for Investing Daily. Thank you so much for listening, and I hope you'll join us today.